It's our pleasure right now to welcome Dan Carlson, founder of Tailwinds Research and the lead portfolio manager for DFC Advisory Services. Thanks for being with us today, Dan.
Hey, it's my pleasure, guys. Thanks for having me.
So Dan, let's start off with what beer are you drinking?
I'm drinking, well, it's a local beer, which you can probably get all over the world these days, Lagunitas IPA.
There you go. Now, are you? Do you have the fires outside? For those who don't know, Dan's actually from California, and are the fires burning outside your door, Dan?
You just wanted to start off with a sore subject, didn't you?
So why do we save that for the after hours, Al?
Yeah,
let's talk some stocks here.
Yeah.
You're a micro cap stock manager. Why do you focus on those kind of that part of the capital structure?
Well, it's a combination of things. So number one, as my wife would be happy to tell you, my ability to take risk in my portfolio far exceeds the average individual. So I love to get, I love these story stocks for the most part. But what I like about it from an investment perspective is it's an underfollowed area. So the amount of money chasing stocks these days is huge. As you know, there's more capital out there than ever before. But that money is pooled in large pools where they can't even look at a stock that's a 50 or 100 million market cap because they'd have to buy the whole company, and they don't want to do that. So there's the money allocated to this space, especially after all the issues with Bernie Madoff and the problems in 2008. The money allocated on an institutional basis to microcap stocks is pretty much non-existent. So you've got a situation where these companies all need more money, and they're willing to tell their stories and talk to whoever wants to listen. And the number of people listening is minimal, especially from a institutional focus side. So I can never manage a lot of money in this space, but I hope to, and so far I've been able to, up to the last couple of months, put up some really good numbers by being one of the few players in a space that's exciting yet undiscovered to a large degree.
Yeah. So Dan, I have a good buddy that it basically concluded the same thing as you. He had traded commodities his whole life, and he'd kind of thought about where he can get an edge. And he said, if I phone up the CFO of, Royal Bank or something like that, they're never going to take my call. But meanwhile, I phone up the CFO of these microcaps, and not only are they willing to take my call, they're talking him, they're giving him information, they're teaching him about his company. And he says, all of a sudden I become important and I can actually gain an edge by doing research, which is for him something that he just looks at as one of the few ways that the individual investor has to outperform these days.
Exactly. There are very few ways to outperform because, as you know, every part of the market is overpicked by large managers, and there's more analysts chasing stocks and bonds, et cetera, than ever before. But one of the neat things about my platform, since I'm also blogging about these companies, is I get information from multiple avenues where the CEOs and CFOs, if something's happening, they're willing to reach out to me proactively. And at the same time, I have a lot of readers that are in return feeding me ideas and feeding me information on my companies that I didn't even know on my own. So I've tried to create sort of a Dan Carlson version of Seeking Alpha specific to my own portfolio, and it's come together pretty well. It's exciting.
Well, that's great. So why don't you walk us through some of the names that you like best at this time?
All right. So if you skip this next slide, so I just wanted to put this thing in there just to show you that, especially last few months, and this is how the Russell 2000 has underperformed over, basically since sometime in early 2018, and it's creating some amazing opportunities. And this is the Russell 2000, which dwarfs the average market cap of my holdings. So the underperformance for my group is much greater. So if you want to just skip on. And the key to microcap right now is, well, the last slide is the money. Companies that are funded are outperforming, and companies that need money are getting crushed. That's kind of like the bottom line on this space, if you want to sum it up in a nutshell. So then skip the next slide. And this is a stock I own, and it's fully funded. And they've announced a number of partnerships. They are creating what they call a CHO stopper, and CHO, for those who know biotech, is Chinese hamster ovaries, which is what all all your biotech drugs are grown in is a Chinese hamster ovary vat, which is kind of disgusting to think about.
Okay.
But that's what you
Well,
see.
well, one second. They grow it in a Chinese hamster ovary.
Well, that's the platform that is used to grow these proteins and molecules that go into.
Does that come with a hamster?
I don't even like to think about it, to be honest. That's
It's
standard out there, and these guys have a fungal growth that looks to replace that. It appears that the potential growth rates are much higher. The cost is much lower, and you can really, if this platform takes off, it could dramatically change the cost structure of manufacturing biologics globally.
okay. So what's the name of this company? So we know the symbol's DYAI. And how do you where does it trade? I see that you got the .bz at the end of the symbol. Where is that trade?
That BZ is just a function of my quote service. It trades on NASDAQ. They just uplisted to NASDAQ a few months ago. They were few sheets before that. But the point is that this company is fully funded. They got $1.70 a share cash, is bumping along for a long time. And then you see the stock just takes off, and they're light years from revenue, most likely. I mean, they're getting some revenue from partnerships, prepaid funded partnerships, but from any of their products actually being used in the marketplace, it's years away. But if you're fully funded and have a good story, your stock can take off. So that's I just wanted to sort of set the stage of what happens when you have money and a good story. And Dyadic is a good example of that.
Okay. Right. So let's move on to the first 3 ideas for year end of 2019.
Yeah, so I have a portfolio of about 19 companies I follow at this time. Some of them I write on, a couple I don't for various reasons. Basically, I don't write too much on heavily shorted stocks because it ends up getting the Twitter universe fired up, and I just don't like to deal with that. But what I'm looking for the year-end ideas are companies that have funding in place, have great catalysts, and are being overlooked by the markets, in my opinion. So that's sort of how I selected 3 to talk about today. So if you want to go forward. So the first one, this is a neat company. It's a classic example of and I talk about this, about MySpace being public venture capital. So they're really VC companies that are public for whatever reason, and in most cases probably shouldn't be, and would have much higher valuations if they were private. Because the public.
So we're talking about Summit Wireless, WISA.
Right. So Summit went public in late May of last year at $5 a share. Needed more money, had a great story. They were a little delayed on the rollout of their products, which is standard fare for every company under the sun. But as you can see, the result was that the market penalized them heavily, and they did some more financing at $1.33, and then did some a couple weeks ago at 70 cents. But meanwhile, their products are doing exceedingly well in terms of development, and they're at this inflection point as a company. But you wouldn't know it by looking at the stock, and this is sort of the opportunities that are there.
So Dan, what exactly do they do? Like, can you explain what their business is?
Love to. So this is a great story. They have created a standard for wireless surround sound audiovisual systems. So if you think about so do you guys have surround sound for your TV?
Yep.
I do, but I haven't got it working properly, to be honest. It's like I'm when it comes to plugging this shit in. But
Patrick,
anyway,
I told you can't use that word. Okay, let's go on. Sorry. Go ahead, Dan.
Yeah. Kevin, do you have it?
Yes, I do.
Right. So what you'll find if you're talking to portfolio managers and people on Wall Street, they all have the money. They've got their TV room wired and speaker wires through the wall, going to an amplifier that connects to the TV, right?
Right.
The rest of the world, which would be like the 99% of the world that wants to watch the Super Bowl and doesn't have the money to wire up their walls, is using a TV and in some cases a sound bar or something to try and improve the quality. But everybody knows the future of audio is wireless. Look at how Sonos is doing, right? So WISA is a standard that's being adopted by speaker manufacturers to create very simple to install surround sound. So basically, if you walk into Best Buy, and this is as of this week, you can go into a Best Buy store in the US, buy an LG TV, and buy a Klipsch surround sound system. And all you do to connect the Klipsch surround sound to TV is you plug a little dongle into your TV and you plug the speakers into the outlets. Boom, your system's set up. So the simplicity, this will work really well for you if you're having trouble setting up your system. The simplicity is amazing.
Yeah.
But what makes it better than anything else out there is on the technology side, which is kind of hidden under the covers, but it's better than wireless or wired. It actually has less lag because it's wireless than you have using your amplifier. It's much better than running through a home Wi-Fi system or through a Bluetooth system in terms of the lag. So you've got the best sounding surround sound system out there with also the simplest installation. And what Summit does is they've created a standard. They send and receive chips that get installed in the speakers. So Klipsch, you've probably heard of them, Harman Kardon, Bang & Olufsen, these companies all have products that use this system currently in the market, but it's very nascent. They're just now rolling it out. LG is the first TV company to support the standard, and you're going to see that change over the next 12 months, where you're going to see a lot of TV manufacturers support the standard. So you're at this total inflection point. Like I say, I went into Best Buy stores last week. There's the picture of the display in a Best Buy store right there. As you can see, Klipsch is the speaker company, and they're promoting the WISA standard. And
so the Summit Wireless has their own standard that's being adopted. Like, so does that make them somewhat competitor proof? Like, where are the risks to this story?
So let me tell you a standard that you use all the time, Bluetooth, right? So every Bluetooth device connects to every other Bluetooth device, and most people don't know this. Qualcomm owns Bluetooth. So that's what WISA is trying to do with surround sound. The risk is quite simple, that the standard doesn't get adopted, that people decide there's a different way of doing it. But the good news is every review you read says that this is the best thing out there. And if you look at the rate of adoption by speaker manufacturers and TVs, it's accelerating rapidly. So, my estimation is this thing takes off.
And so, are they fully funded for till when? When's the next unfortunate? Like, you hope always that every financing is done at a higher price and not a lower price. But how long before they need some money again?
Yeah, so they're going to need money at some point towards the end of the first half of next year, right? Sometime in Q2. Okay. But so that's where this one. That's why this story has been pummeled. But at some valuation, you can look through dilution, in my mind. And when you've got a stock that's trading at a 13 million market cap and the invested capital in the technology is like 80 million, and it's working and rolling out, I kind of just look at it and go, I don't care if you dilute me. I'm going to make some money here.
I got it. Right. That's a good story. Okay, let's go on to the next story. Anixa Biosciences. Did I say that right? ANIX.
Yep, Anixa. Right.
Anixa.
So this was my top pick for the year, and as you can see, it's done absolutely nothing for me. It's I think exactly flat for the year. So Kev, can I switch topics for 1 second?
Sure.
I have this friend, Sriram Paravemba, who's in the display industry, and he told me this rule of thumb he has, and I call it Shri's Law. And that's, you take every timeline a management team gives you and multiply it by pi, and it's usually accurate. So
it's kind of like there's one of those rules for when you work with contractors on your house.
Exactly. Yeah. And you can budget and multiply by pi as well, unfortunately.
That's funny.
So Anixa was my top pick coming into the year, and I love the story. It's one of my largest holdings. And it's, the timelines have been pushed to the point where eventually, if you keep getting halfway to the end zone, you're going to get there eventually. You're one atom apart, right? They have major catalysts that have all been sort of pushed into Q4, but all are going to come together. And that's why. And this company has money; they don't need any money now. And so, skip to the next slide, would you?
Yeah.
Yeah. So these are the catalysts they have coming up, and slide catalyst number 2. I have a picture of Angelina Jolie there because they're filing an IND, which is a new, it's the right to go start testing in humans, basically with the FDA. They're filing that in Q4 for breast cancer vaccine, and it's specifically for the kind of breast cancer that Angela Jolie had an operation to prevent. So, as you know, there's a number of women out there that are genetically predisposed to getting cancer. These guys have licensed a vaccine from the Cleveland Clinic that in mice trials has shown 100% efficacy of preventing that kind of cancer.
Right.
And so that
and what's the market missing? Like, why is the market not care? Is it again a case of it just being too small for anyone to care about?
So this one is it's a couple things. Number one, their model is unique for the biotech industry. So typical biotechs raise 20 million, 50 million, 100 million, hire a bunch of doctors, build a lab, spend all that money, hopefully hit some catalysts along the way, and then raise more money, right? I'm sure you've seen that a lot. It's a very capital-intensive business. And this CEO, who by the way is Harvard and Stanford background, he's on the board of the American Cancer Society. He is probably the smartest CEO I deal with, and definitely one of the rock stars out there for the microcap space. He's awesome. His model is quite simple. I'm going to work with partners who have labs and have budgets, and I'm going to let them develop my products for me under a partnership. So that's what he's doing. It's like this breast cancer vaccine was licensed from the Cleveland Clinic. It's got a Department of Defense grant. And that's another little interesting tip with it. Department of Defense grants more cancer research money than anybody else in the world.
Why is that?
It's an odd thing that the government created to have the DoD spend money basically on breast cancer initially. I don't exactly know why. I think it has something to do with the fact that they need to spend more money women related for healthcare.
Oh, okay.
It's a weird thing, but they spend hundreds of millions a year in grants. So they granted these guys around $8 million to do their phase 1 trials. So you got a potential breast cancer vaccine that has had excellent animal results and is fully funded through phase 1. If it works, it's worth billions of dollars, and you're going to find out at least the safety data for free on the government's dime. So that's a good deal.
Yeah.
But that model of not raising money, not telling a story to institutional investors, but instead going out and saying, hey, we're going to do this with somebody else on the cheap because other people are spending their time and money and they have their doctors doing it and their labs doing it, doesn't resonate too well, believe it or not, with Wall Street. I mean, it resonates with me. I don't mind them saving money, right? But
that's right. When there's no corporate finance fees, the Wall Street analysts somehow conveniently skip that stock.
Exactly, and if a big healthcare fund can't put $20 million into the stock, they're not going to tell their friends about it. Just not going to get the publicity.
So is it one of those things that you actually think that it's could be a 1,000-bagger if it works?
Right. So the first, if you go back a slide, you're on the wrong stock there. Yeah. So the first one is a CAR T therapy. Are you familiar with CAR T at all?
Nope.
So you're familiar with Kite Pharmaceuticals? Got bought by Gilead for $12 billion, and then Juno got bought for $8 billion, I think. So they developed CAR T therapies. So if this is too deep in the weeds, let me know. But there's two kinds of cancers really. There's solid tumors and liquid tumors, right?
Yeah.
And
why don't you just? Yeah. So this is probably too deep in the weeds for me. You're already kind of confusing me. But what do you think? Like, where do you see it going if it works?
I'm glad you cut me off. So okay. if the CAR T therapy works,
Yeah.
They're going after solid tumors. Kite went after liquid tumors and got bought for 12 billion. Juno went after liquid, bought for 8. There's a number of players who are successful in CAR T for liquid tumors. There's been zero success for CAR T in solid tumors, which is twice the market size. They think they're a platform. So, I mean, I don't want to, get over my skis, but it's worth tens of billions if it's efficacious in multiple forms of solid tumor.
And what is its current market cap?
It's $20 million. So you almost view it as just like a cheap call option. Chances are it's not going to work, but if it does, it's like a huge multi-thousand bagger.
Yeah, I mean, it's $100 million market cap now.
It's 100. I got my digits wrong. I'll just look here.
Or it's 80, actually. I think.
Oh, it's 80. Yeah, sorry. You're right. I was looking at the shares outstanding. I blew that. Yeah.
It's amazing to me. I believe that this thing stands a pretty darn good chance of being successful. Insiders have been buying stock consistently. And then in a very telling signal, the head of CAR T for Novartis, which is the biggest CAR T investment firm in the world, you know who they are, right? He just joined the scientific advisory board this week.
There you go. Okay, well, let's get to the last one. Harrow, HROW.
Right, and I got a picture on the next slide just for you, Kevin.
Okay, that's the Turtles.
Who's your favorite money manager of all time?
Well, my favorite is no, it's not Richard Dennis with his Turtles though. I like him, but I'm actually more of a Druckenmiller slash Soros guy.
Okay.
But anyways, but I do know the Turtle story, and I think it's pretty awesome.
Okay, so Harrow's a neat story. It's they do compounded drugs, but they also take a number of their compounds and spin them off into little startups, which are what I'm calling turtles because I don't know what else to call them, and then they spin those off into separate companies. So they've already launched one IPO of a subsidiary. They've got one that was invested in by a private equity fund, and they've got 4 more in the pipeline. So spinning off sub-companies that all seem to have potentially large market caps, and the model works. Meanwhile, they're profitable on their own, and they're throwing cash.
Wow.
Yeah. And the neat story about this is if you look at those 2 big red drawdowns in September or August, this is what's great about the world these days. And they closed down one little division, and the analysts, one of the publishing analysts backed the numbers out of their model, but they lost like $6 million in revenue from the part they closed down. But he also backed $6 million out of EBITDA as an accident in his model. And he published the model, didn't catch it. The stock got hammered on a flaw in his model, which he corrected 2 days later. But that's the way it is. Black boxes dominate, right? So the black boxes saw the numbers getting slashed, and they sold the crap out of the stock, and then it reset at a lower valuation. So you're getting at $5 a share what was trading at $7.50 just prior to an analyst flaw that has subsequently been corrected, which I think is a statement about our capital markets to some degree.
Fair enough. So Dan, I'm gonna pull it in and say that we're gonna say goodbye at this point. But just I wanted to remind viewers or listeners that they can stick around for the after hours. We're going to learn about how bad the forest fires are raging near Dan's house, and also learn more about all the different picks. But in the meantime, could you tell us a little more where people can find you and where they can sign up for your research?
Right. So at my website, which is Tailwinds with an S, tailwindsresearch.com. I put all my articles up there, and all the articles are free to read, and all you got to do is click on one, and it'll ask you to sign up. And I don't spam anyone. I'm like you, Kevin. I treat my readers well. I don't sell their names out to the world. And you'll also get an invite to get the weekly newsletter that I put out every Sunday. And you sign up for that, and that's how you get all my stuff.
Terrific. Well, thanks again for joining us, and make sure everyone sticks around. We'll learn more about Dan in the after hours.